The housing market bottom is in. Home prices will keep rising. In fact, they're probably going to skyrocket, at least according to Compass CEO. And I'm going to share exactly what he thinks, what he said, what he stated on the record as far as his thoughts related to the housing market bottom. And then I'll react with what I think's going to happen. And then from there, we're going to cover the Florida housing market, at least as far as the East Coast is concerned. I've done a ton of content recently sharing other markets peak to trough, but for this video, we're going to do a deep dive analysis of every market that exists within the state of Florida on the East Coast. If you're new to the channel, welcome aboard. My name is Chris Igo. If you're a returning viewer, I appreciate your participation in our journey. And for those of you who have recently asked in the comment section about my workout or training program, I want to let everybody know that in my spare time, when I'm not selling houses, I'm lifting them, which helps me maintain a fairly muscular physique. But let's get into it right now and see what Compass CEO has to say about the housing market bottom. Because, spoiler alert, I don't agree with him. And yes, I'm aware that the US housing market has already lost $2.4 trillion of equity. And yes, I'm aware that the stock market has come down significantly and that the everything bubble has come down significantly. But having been a stockbroker for damn near 20 years, I also know what it looks like when the market is panicked, when the market is shook, when the market is scared. And I got news for you, we haven't seen that yet. And while the pain of recession has impacted certain people in certain ways, I also know that there is no recession in South Florida. There is no recession in South Palm Beach County. There aren't many folks that are feeling the pain of recession in a big way, which is not to minimize the fact that a lot of people are feeling a lot of pain right now, but homeowners in Florida are sitting on a ton of equity. And equity is not real until it's realized. And I don't suspect that anybody is going to be shook until the pain of recession becomes sufficient enough to cause 5% unemployment. And we're nowhere near that yet. Let's get into this video and see what Compass CEO has to say, because I found it to be incredibly entertaining.
To you still feeling confident in that call?
I'm still feeling confident in the call. In December, pending listings that had accepted offers were down 40% year over year. And in every week of January and every week in February since, we saw an increase in listings that had accepted offers week over week over week. And in February, prices were actually higher than in January.
Interesting. In February, prices were higher than in January. That's an interesting perspective, and it's certainly not my experience in the markets in which I've covered recently. But let's continue.
Interesting. We also did see mortgage rates come off those highs from last fall, and now we're back at those levels again, though.
Yeah, so I would describe January as a frenzy.
January was a frenzy. Interesting. That's not what the data supports in the markets that I've covered. Sales have dropped radically across the board, and interest rates have skyrocketed. But let's continue.
Yeah, people were saying that it felt like it could be the pandemic period all over again. Since then, mortgage rates have gone up 100 basis points. The frenzy's over, but we still see multiple offers, more foot traffic, and more buyers and sellers.
It seems like we've got this tug of war between affordability and inventory.
I don't know what data he's looking at to support any of this. And I know Compass thinks they've got a great technology platform, which I don't agree with. And I'm also aware that Compass stock price has gotten decimated here and they've laid off tons of employees. But putting all that to the side, those metrics are not supported in most of the markets that I cover. But let's continue.
Right? Like, yeah, the prices are way higher than people want, but the inventory is so little that you got to do something. Are jobs at the center? If people start to lose their jobs, does the housing market then have to buckle one way or the other?
Interesting question. Will unemployment factor into the housing market? Let's see what he has to say.
If people lose their jobs, the wild card will really be what happens to rates. Because if people lose their jobs, then the Fed could bring down rates. And if rates go down, and you have mortgage rates back to 6 and 5.
But doesn't the Fed
And if the queen had balls, she'd be the king. But let's continue.
want people to lose their jobs?
The Fed has a very difficult challenge. They want to bring down prices, and they're raising rates to bring down prices. But as they raise rates, mortgage rates go up, and more homeowners, 85% of homeowners have mortgage rates below 5% today. 28% of homeowners have mortgage rates below 3%. They consider it a financial asset. So the higher mortgage rates go because of the Fed's action, the less homeowners want to sell because they don't want to lose that financial asset.
Let me say that differently because this is painful to watch. No homeowner who is in an interest rate, has a mortgage interest rate of 4% or lower, is interested in trading up into a 7, 8, 9, 10, 15, 20% new mortgage interest rate, which is obvious, right? So most folks are not going to be very excited to do that. Now, I can also make the argument there are things that can be done in a buyer's market in order to negotiate a better interest rate. Depending on the terms of the loan, you can negotiate back anywhere from 3 to up to 9%. You can't go past, excuse me, you can't go over what the seller's closing costs are in terms of a rate buy down, but you can competitively bring your interest rate significantly lower than whatever the current mortgage interest rate is if you know how to negotiate that the right way, if you're working with the right real estate professional. So there is an opportunity for move up buyers, which is much better than what current interest rates are if you have the right leverage in the right community, in the right housing market. But that's going to be on a case by case basis, depending on which housing market you're in and what the dynamics of that housing market are. But let's continue.
And move it over something with a 7 handle on it. And so then there's less inventory, still the buyers are there, and that's what's creating more price appreciation.
So you don't think that home prices are going to fall much further than we've already seen in certain markets? Is that what you're saying?
I don't believe home prices will fall much more. We went.
Great news. The housing market bottom is in. It's not going any lower. Nothing to worry about. Nothing to see here. It's all good. Dust off your spacesuit. We're going to the moon, baby.
From January last year, from all-time low mortgage rates to a 20-year high in mortgage rates in 9 months. And in December, that trough month, you had prices that were still up 6% year over year, down 4% from the spring 2022 peak. But we have since seen prices moderate up just a little bit. And you have analysts for the first time in 9 months saying that prices could actually appreciate this year.
I don't believe what analysts say 90% of the time. An analyst's job is to make a prediction based on whatever it is that they're analyzing. But analysts are wrong all the time. I can tell you, having been a stockbroker for 20 years, that I could find analysts' opinion of value or opinion or estimate of what they thought a particular equity might trade at in the future. And I could find analysts all over the place that had radically different opinions of what those future values might be, which is a long way of getting to. Most analysts are wrong most of the time. But let's continue because this is fun.
So just quickly to bring this around then, what does that mean in terms of your own hiring? Because you were very aggressive in terms of recruiting real estate agents. Have you been not as aggressive? Is the market looser from that standpoint?
Yeah, so we made a decision over the summer to stop giving any equity incentives or sign-on bonuses to agents. We have since hired over 1,000 agents who have come over because they believe the platform will help them grow their business and have a better quality of life, more income to support their family, more time to be with their family. But we are focused on profitable growth now in every way.
Oh, well, congratulations. The CEO of a company just said they're focused on profitability. Good business choice, genius. I can't listen to any more of this, but I will share what my non-analyst opinion is on what the housing market looks like here in South Florida, in the markets that I serve. And I suspect that looks like single digit growth as we go through 2023 and 2024. Single digit growth. But that's not what I expect the rest of the housing market to look like. I expect there are going to be a lot of markets that are going to trade very differently. And that's already what's happening right now. So the housing market here is very different than any other market that exists. It's certainly different than Phoenix, Arizona. It's certainly different than Austin, Texas. It's certainly different than Boise, Idaho. And it's certainly different than Nassau County. It's very different and it's hyper local. So please understand that whatever's happening on a national level is certainly not what's happening on a hyper local level. And now let's do a deep dive into the housing market data that exists as of January 2023, which is the most recent data that we have, and it's sourced from Zillow. Now, to be totally transparent, I don't necessarily trust Zillow data, but it's close enough to give you a 5,000-foot overview and give you some context. But full disclosure, when I run this data versus other sources, I find that it's not totally accurate. But it is close enough to give you some reference points and also understand that when you're shopping in a market within any of these counties, the market will trade differently. It will have a different intensity of demand and supply and demand are going to dictate what happens, period. But let's get into it right now. This is the home value index by county, all the way down the east coast of Florida, so that you've got the best information to make the best decisions for yourself, for your family, and for your financial bottom line. All right, we're going to start in Jacksonville. We're going to start in Duval County. And what you can see is peak to trough appreciation of 1.35%. And if you look back from January to June, what you see is single digit appreciation. That's what it is. A massive uptick from 2019, up 63%. From 2018, up 78%. Massive increase in values. We continue to see single digit appreciation, at least as of January 2023, but that's what it is. And so the homeowners in Jacksonville are feeling quite wealthy. They're feeling quite secure because the housing market in Jacksonville continues to uptick. Now, bear in mind, interest rates are now pushing 7%. Is this going to be the case moving forward? Yet to be determined. I don't know. But for today, we've got all green, which takes us to Deltona, Daytona Beach, Ormond Beach. We're talking about Flagler County. And now we've got some red. We've got 3 months of red to be exact. We've got a 2% depreciation from peak to trough, down almost $7,800. Well, that's a 2% reduction. And there's a downtick for the last consecutive 3 months. That's a changing market. That will start to impact the psychology of homeowners that are in that county. What does the future hold? Yet to be determined. I don't know. But as of right now, we got a downtick peak to trough of 2%. Now, relative to pre-pandemic numbers, massive increase. 2019 up 56%, 2018 up 65%. So the folks that are in that market are probably aware that they're starting to see a downtick, but they're sitting on a ton of equity and they feel safe, they feel secure. And until the pain of recession gets bad enough for people to start to feel panic, I don't think we're going to see enough change that brings this back down to anything close to pre-pandemic numbers. Yet to be determined, I don't know, but let's check out the next market. And now we're in Volusia County. Volusia County is all green, baby. Bring in the greenbacks. Up peak to trough, $2,600 and change, a touch under 1%. And what you can see is exactly what I've talked about all along, which is single digit growth on the East Coast. And relative to pre-pandemic numbers, well, we had a massive uptick, 54% from 2019, 66.5% since 2018. Ain't nobody concerned in Volusia County, at least not as of January 2023. What does the future hold? Yet to be determined, but I can tell you 7, 8, 9% interest rates is no bueno for anybody. Which takes us to Brevard County, which takes us to Palm Bay, Melbourne, and Titusville. And what you can see is a negligible decrease peak to trough, 0.01%, 33 whopping bucks. But it is a downtick, and I've got to share what's happening in real time so that you've got the best information to make the best decisions for yourself, for your family, and for your financial bottom line. January, slight downtick. Almost everything past that is single digit appreciation. But relative to pre pandemic numbers, massive uptick. 54% in 2019 and 64% in 2018. Lots of folks sitting on lots of equity that are feeling quite secure. Which brings us to Indian River County. We're talking about Sebastian and Vero Beach. Peak to trough uptick of 1.2%. All green down the line, all green from January to June. Single digit appreciation. Relative to pre pandemic, massive explosion of equity, 61% in 2019 and 73% in 2018. Things are looking good in Indian River County, at least as of January 2023. Which brings us to Port St. Lucie, which I've talked about in other videos. We're talking about still Martin County, and what you can see is peak to trough, a decrease of $3,200. You can see a trend developing. You can see that January through November, a negligible decrease, but a decrease nonetheless. But relative to pre pandemic numbers, massive uptick, lots of folks sitting on lots of appreciation, lots of equity, feeling quite secure. 53% in 2019, 61% in 2018. Are we going back to those values? Not anytime soon. Is the market going to pull back in this market? Well, the trend has been confirmed, and it'll be interesting to see what February yields. But as you know, if you've been watching for a while, we're not going to know February numbers until the end of March. So keep in mind, this data is from January, and also keep in mind, I'm giving you the 5,000-foot overview. The markets that trade within these big metros, within these counties, are very likely to trade with different intensity of supply and demand. Which takes us to Palm Beach County, which is the county in which I live. And it's the metro of Miami, Fort Lauderdale, and Pompano Beach, at least according to Zillow data. And I've mentioned that this data is inaccurate. Well, Miami and Pompano Beach are not part of Palm Beach County. They're in Broward and Dade County. So you can tell that this data is not 100% accurate, but it does give you a big picture overview of what's happening in Palm Beach County. But to be clear, the markets that exist within this county are going to trade very differently. And what goes on in Boca Raton, Delray Beach, and Boynton Beach is very different. So Pompano and Miami should be completely excluded from this mix, but Zillow's data and algorithm is not that great. And we all know that Zillow is not to be trusted, especially if you're looking at their stupid ass estimates. And what you can see is all green. And peak to trough, a slight increase of 0.18%. But it's appreciation nonetheless. And while it's 100% true that the appreciation has slowed tremendously, it's still appreciating. And I can tell you, as a boots on the ground operator of a high performance real estate team, that these numbers in Palm Beach County are very skewed, because within the markets that I service, in Boynton, in Delray, and in Boca Raton, these numbers are very different, and the price points are significantly higher. But again, this is a 5,000-foot overview, and what you can see is single-digit appreciation. Now, relative to pre-pandemic numbers, massive uptick, 56% in January 2019 and 64% in 2018. Ain't no recession in Palm Beach County. Which then takes us to Broward County. And Broward County, peak to trough, is an increase almost 2.6%. Peak to trough, an increase of almost $13,000. And what you can see is single digit appreciation, as I've predicted, as I suspect will be the case as we continue to push along in 2023. But relative to pre pandemic numbers, massive explosion, 49% in 2019 and 57% in 2018. Which takes us to the 305, baby, Miami-Dade County, Miami, Fort Lauderdale, Pompano Beach, Metro. And what you can see is peak to trough, an increase of 3.3%, a touch over 16 grand, and single digit appreciation from January to June. But relative to pre-pandemic numbers, massive explosion of equity for homeowners. 55% in 2019, 66% in 2018. And if you watched my last video covering what's happening in the Southwest Florida market, you can tell a tale of two very different markets because Southwest Florida trades very differently. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up, share it with a friend, keep your eyes peeled because I will continue to tell you the truth and share the housing market data that exists within the state of Florida. If you would like to be connected with someone that we know, like, trust, an all-star professional that can absolutely negotiate and advocate for you the right way, irrespective of market conditions, then please reach out and we'll connect you right away. And if I can ever be of service, please reach out to me directly because we would love to help. Now check out my next video because I suspect you'll love it a lot. And until next time,